Thank you so much for joining us today. I've got Bob Klee, who most of y'all will already know from his time in IOA and kind of the thought leader when it comes to high net worth insurance. But what we wanted to do today is just spend a little bit of time getting to know Bob a little better, getting his thoughts and ideas on how to approach the high net worth insurance space and see where the conversation takes us. So, Bob, thank you so much for jumping on with us today, and excited to get to hang out with you a little bit.
Looking forward to it, David. It's going to be fun.
Tell us a little bit about your background and what got you started in the insurance space.
Sure. Been licensed since 1986, eternity ago. In another lifetime, I was a Honda and Yamaha motorcycle dealer in Southern California. So I got licensed. If you're in California, you know Pacific Specialty, they used to be McGraw Insurance. Got licensed just so we could offer that when people bought bike. But left that to be a farmer's agent for a short time. And then moved from California in Torrance, California, to Lexington, Kentucky, and started the Scratch Allstate agency there for 6 years and change, and then sold that to move down to Nashville. And while doing that, started a company online called Hometown Quotes, which is arguably the fourth largest insurance internet lead aggregator online, and then still, I guess, the second largest stockholder there. 2008, got rid of my Allstate agency, no agency at all, from 2008 to 2015, when my partner John Kelly and I were toying around with getting back in the insurance space. Man, I don't want to do standard market stuff. There's this niche. You're a Chubb customer with your house here in the Colorado area. There is this niche out there. I keep having agents ask me, do we sell leads in that space? Why don't I just see if they're real? Got on the phone, started calling leads, said, hey, this is the president of Hometown Quotes. Saw you were looking for insurance. What got you looking at that $5 million home? Well, what I learned real fast was about over half the leads were bogus, because in our space, we don't care about the price of the home. We care about the name, the address, the contact information. That's good. Cool. We're gold. And because we didn't validate the cost of the home, when you'd have $1 million home, it was like 100,000, or $5 million, it was really 500,000. So that came into play. And then, but the ones that were there, they were there. They were looking. I heard something was better than State Farm, or heard a friend say that Chubb was better. And so they were investigating that. And that's how they came across us online. And so I realized that, yeah, there is something here, that even though the carriers didn't believe it, those that are millionaires are really looking for online insurance. They go to Amazon, right? So why wouldn't they go to insurance? And they use and so forth. We validated it in 2015, the last quarter of 2014, January of 2015, we sold our first policy. It was actually an ACE policy. And then later on that spring, literally catty cornered across, there's a four-way intersection in Englewood, Colorado. Catty cornered across from us was Chubb headquarters. And yet it took them forever to finally say, yeah, maybe this will work. They didn't believe it either. There's no millionaires are online looking for insurance. But we got Pure on board, and we got Encompass on board at that time. Everybody at Point, including Nationwide Private Client, because our rep with Encompass went over there. And so going gangbusters with that, calling leads. I literally you're in startup mode, so you do everything. I was calling the leads. We hired another guy, calling the leads. And so in 2016, we took on Cincinnati. We grew and grew. 2018, we really started growing. 2019, oh my God, we literally wrote over $3 million in new business, and with literally 3.5 salespeople, all internet leads. And 2020, COVID hit. So if you asked me what my plan was in the beginning of 2020, I'd said we're going to write $5 million in new business. And no, because COVID hit, we're a startup insurtech business. So we cut our marketing back literally to 5% of what it was in 2019 to have enough runway to go to 21, 22 for a new round of investment. And what we ended up doing was selling in October of last year. But that's how I did it. That's what we did. That's my background. I love insurance, and the high net worth space is just more fun. It's an interesting deal. You have billionaires we've dealt with, and complicated cases, kind of like commercial insurance. Find your niche. And I think, like Mike Strom's to say, niches are riches, and find your niche, find something you really have a passion for. And we did, and I did, and I really love it, and that's why I'm starting over again.
Tell us a little bit about what you're going into 2023, what you're going to be doing.
Sure. I've restarted this Kleeco, like my last name, Klee Company, Kleeco Insurance Agency. AIG's on board. I'll have Chubb shortly. I'll still be doing the wholesale side. I'm going to focus more on that to start than the retail. I just enjoy working with agents, and I enjoy working in this niche and helping agents get a light bulb come on and close the deal. And even on I have guys there who have an appointment, for instance, with Chubb, but it's like they send it over to their aggregator, who it is. Here's the quote. and they don't know how to sell it because they just get a proposal back. And a number of times I've helped guys do that, and other times we've quoted it with AIG if they didn't have it, and or Chubb to boot. And we closed some interesting deals. Actually, the largest deal wholesale that turned into retail, because you can't wholesale, for instance, all the carriers. But I
Right.
treated it as a referral when we had it, and we wrote it in California. It was a $34 million coverage A home in Malibu for $300,000 in premium. Think of that,
Pretty nice.
$300,000 for one homeowner policy.
There you go. Oh my goodness.
Yeah.
That's definitely one to hang your hat on. If you're someone who is wanting some help or wanting to get into some more of the high net worth clients in space, Bob is someone who is always willing to help. And the nice thing about his new setup that he's been doing for years is, and he's going to continue to do, is that he can give you that help while also helping you write the business and getting you paid, which is always going to be nice for everyone involved. As we brought that up, tell us a little bit on how would you define a high net worth client?
I like what Chubb says when you use I call you high net worth when I'm talking to you. I have a $3 million home, but my neighbor has a $6 million home. He's high net worth to me, but I'm not there, right? So I like what Chubb says, successful people like yourself. So when you're talking to those folks, high net worth is kind of like inside baseball, and it really isn't defined very well. In our space, obviously with our carriers, whether you're talking Chubb and IG, Berkeley One, Cincinnati, all those, for the most part, they have a minimum coverage A of $1 million. In some markets, they'll drop it down to 750. And actually, Chubb used to go down to $300,000. What's interesting is you'll have, and we have multimillionaires. They don't have $1 million homes. They have a need for a $10 million umbrella, but their ego isn't in how big my home is. It's I've got these other assets out here working for me and so forth. So they have a need for a large umbrella, but they don't have the home. And those are harder to do because it's a pretty hard and fast rule. I have to anchor the policy with the homeowners. So then you got to get more creative and find other sources
Yep.
for the excess and so forth. And you're piecing it together, which is not as convenient or easy because it's not under one carrier now. The other thing you find when you're talking $1 million coverage A, unless their net worth over $10 million, when we say it's a lot easier to sell to a customer with a $2 million coverage A home and up than it is less. Because a lot of time they've stretched to buy that $1 million, $1.5 million. They just moved into it. All they're thinking about insurance is they don't like insurance. They want the cheapest thing they can afford. And they don't understand the value that we have in this space of offering umbrellas that do a whole lot more than they do in the standard market. We have third-party liability, for instance. Think of uninsured, instead of uninsured motorists, it's just uninsured liability. We have a way of taking care of nonprofit boards. We have a way of taking, even in some cases, limited cases of workers' comp, and even if you have lawsuits for, acronyms escape me, for sexual harassment and wrongful termination and so forth, we can endorse umbrellas for that in this space as well. And so a lot of times it's like when you're talking to the customer, it's like the light bulb comes on and you start talking about the gaps they have they weren't aware of. They come to us with a $3 million home and their State Farm Allstate agent is giving them a $1 million umbrella thinking they're doing them a favor. And they're really not. And when you're talking to these customers, I guess I'll use this from later I'll talk about how you get into the space. But the CPRM class they have a class called Winning the Business.
Yep.
And they have a commercial program for that as well. But they talk about you have 4 strings to play on. And one is price. And that's not the string I want to play on. I want to play on the other 3, which is gaps in coverage, relationship, and service. Of course, every agent will say, how do you differentiate yourself? And they say, it's our service, our service. It's amazing how them that say that don't even have 24-hour answering service, but they pride themselves. So you have to weaken at least 2 of those strings generally to win the business. You can't just play on gaps alone.
Right.
You have to sometimes, but that's not rarely. You have to talk about the service and the relationship. And the way you do that is by asking questions, obviously. And so one of those things, again, learn from the class. And it's really interesting. I've done this over the years. Probably all the good guys in sales who've been doing this like I have for a number of years. I like the way that class gave me the terminology to use. So it's like, it's like, David, who are you with? Oh, State Farm. Oh, great company. How long you been with them? Oh my God, at least a dozen years. That's great. Why did you think you chose State Farm in the first place? Scratch their head. I don't know. My friend recommended service. Great. And let them talk, right? Yep. Then why are you looking to leave State Farm today for? You got to find out that why. When you have that why, and there's usually more than one, then you have ammunition to go back when you present. And again, I always like what they teach is do a diagnostic intake, but you don't fix anything. You say, is that important to you? Okay, let me write that down. And then we come back later with the presentation. In the standard market, I know guys, they start filling out the quote where they're talking to the customer, done. So I don't know how they focus on everything. Too many balls in the air. And they're done. Oh, I can do that for $99.99. What value did you add? You might as well call it Geico or Progressive, right? And so in this space, adding value, being a professional and knowing what to ask. I'm not going to plug in for Dave. Dave knows I needed an intake form. And so I looked out there for resources, and I like Dave's RiskAdvisor. And I'm telling you now, I'm going to be using it because it does a lot of what I need to ask the right questions. And then, of course, he has integrations. Some of them work for me, others work a lot for the standard market because that's where David's in. But it really works for me because it makes sure you ask all the questions all the time, puts it in one nice place. And David's really good. He's a good listener. And he makes changes quickly. And so we worked together on some of those, and then you heard it. But it's really good. If you haven't seen it, I recommend. I'll put a plug in for David. You need to take a look at it. It works.
Yeah, I absolutely do appreciate that. And yeah, that's one of the things that I'm looking forward with working with you on this is whether it's a completely separate high net worth product for it or making some adjustments to the current piece of it, but giving agents the tools to those who want to focus on the high net worth space, giving them those tools. So how are you determining what someone's liability risk might be?
It's a great question. And again, it's something I've developed. I've got two of the high net worth designations. I have the CPRM, the National Alliance that does the CIC. I have the one through the PRMA, Private Risk Management Association, it's called the CPRA. The only one I don't have, you have to have, it'd be a big chub dealer to get into it, so you can go to Pennsylvania through the Wharton Group and get it. But I kind of get more learned. It wasn't like a formula that they gave me in either one of those. It's just kind of in working with folks in there, we came up with a definition. So I don't take 100% credit for it. But basically, when you talk to a high net worth customer, the first thing they're worried about is I don't want to lose what I have. So they know if this is their $150,000 Mercedes G-Class, they know that thing's 150 grand. And I have guys that have those cars and they have liability only because they 150 grand to them, like maybe $1,000 to you and me. But what they do know is if they get in a lawsuit, that number could be anything. We see it. We see the huge claims the news talks about. I just saw somebody got $42 million for wrongful termination. And so they understand that. So when you bring up stories, again, story stuff. So let's first talk about the formula. Then we'll talk about the stories, okay? So the formula is, what is your net worth today outside of retirement accounts? Because until you annuitize retirement accounts, you can't go after it. I always point to people that are as old as me. You saw the O.J. Simpson trial back in the day. He moved to Florida, unlimited homestead exemption on his home, and all these other laws are protected. And a lot of his investments were in retirement accounts, which couldn't go after an award in the court. And so what is your net worth outside of retirement accounts? And then if they're still working, them and or their spouse, kind of the net present value of the next 10 years of their income and add a little bit for inflation. Or to make it simple, if you don't have that calculator, what's your take home pay times 10, add a little bit more to it for inflation. And the reason is that in every state out there, if you get a judgment, they can attach wages for up to 10 years. If a guy's making six figures, they're going to do it. He's making $30,000 a year. It depends, right? And so we have to protect that. But more importantly, and the cool thing you can do in this space is depending on the carrier, you can write up to $10 million of UMUIN, uninsured motorist, or uninsured liability, depending on the carrier. The person's nationwide private client gets a $5 million of uninsured liability. Pure, AIG, and Chubb, depending on the state, offer $1 million. Not in every state, though. But again, why would you do that? You're up in the slopes of Aspen skiing. There's some snow there behind me. I live in Houston, but I like the snow. So you're up there, and some ski bum, no assets, he rents only. He may have $100,000 liability on his insurance policy. He T-bones you. He's going crazy. He's out of control. And I thought I muted that. I did. Sorry about that. And he's out of control, and he hits you, and you breaks your back, and you're never going to walk again. But you have health insurance. But what's going to pay you with that? You're never going to walk again. If you have third-party liability or uninsured liability on your umbrella policy, which we can do in this space, State Farm's never heard of it, then they either have that $1 or $5 million, again, lump sum into your bank account, the fact that you're never going to walk again. It could be you, your child. And we use the same story in an automobile. Again, stories sell, right? So I always say to folks, you're on a date with your spouse, or your significant other, on the way home, you had an accident, and sadly, the other person, hopefully they're not dead, maybe their child is never going to walk again. How much do you think they're going to sue you for? That's where that formula comes in, right? Everything I got, right?
Yep.
And so how much do I need, Bob? And that's where the formula comes in. But I said, perhaps the more important thing is because most people in this space are good drivers. The more important thing is the uninsured motorist, which you can't get at State Farm, except I think there's 4 or 5 states that require uninsured motorists. But when I was an agent back in the late 90s, State Farm, Allstate, they all quit all uninsured motorists on their umbrella policies at any price. When I was an Allstate agent in the 90s, it was a $45 rider for $1 million to add your umbrella. 1 million umbrella plus that rider might cost you $250 a year.
Yep.
Today, you can't get that uninsured motorist rider on umbrella for any price through State Farm or Allstate unless the state requires it. So I tell folks whether I've already found out by now whether they have kids, whether they're grandparents. And so you turn around and say, now you're in that car and your child or your grandchild's with you, and you get T-boned by a guy and ran a red light into you, and you or your child or grandchild is never going to walk again. You have health insurance, right? Yeah. What's going to pay for the fact they're never going to walk again? Now they need a handy-capable home the rest of their life. They need a handy-capable car if assuming they're a paraplegic, not a quadriplegic, the rest of their life. Where is that coming from? Are you going to self-fund it? Or for about $2,000 a year, if you could get $10 million of insurance that would dump that $10 million in a bank account, if that would happen, would that not be a good value for you? I've never heard a no, ever heard a no on that. It's automatic. Yeah, let's do it. Because think about it, again, the story. I'm trading $2,000 for $10 million. So I'm offloading the $10 million to the insurance carrier versus self-insuring. It could be whether it's 1, 2, 5, or 10. That's the story that sells. And I've been working with some standard market agents, I guess, in case consulting on the side, and I've challenged their team. In our space, unless one auto policy, 5 cars is 5 auto policies, but it's really one auto policy. So our goal is to get to above 2 policies per household, home and auto. How do we do that? Offer an umbrella. But the story is, instead of calling an umbrella, Mr. Customer, what if I had a policy that for about $50 a month, if you had this type of accident and your child would never walk again, it would just lump sum $1 million into your bank account. Would that interest you? Now you have something to talk about. We know we're talking excess or uninsured motorist, umbrella. It's inside baseball. He's never heard the term, or if he has, it's kind of, that's for rich people.
Yep.
But now I've personalized it. I said, for about $50 a month, if you never walk again, or your child, they're going to write a check for $1 million. You have health insurance, you're going to pay a doctor bill. That's going to be $1 million in your bank account. Is that worth a $50 a month investment? A lot of them are saying yes. We're getting a high close ratios on adding that third policy now in the standard market for that reason.
That's phenomenal. In the industry, I consider myself doing pretty well in the high net worth space. I was forced into it with the fact that being coastal South Carolina in the Charleston, Mount Pleasant area, it's very quick that those homes get up over the $1 million mark. But some of the stuff, and you and I have had conversations for years now, but some of the stuff that you just laid out right there is gold. Like equating it to taking it away from just using the term liability or umbrella and morphing it into, hey, let's mitigate some of that with $600 a year or $50 a month, but giving them the peace of mind with those who have that expendable income or expendable money in that situation, that, hey, $1,000 a year is well worth $5-10 million of protecting myself, especially since I'm paying so much to protect others. That resource right there is worth the entire time on the video. So I appreciate you sharing that. That's phenomenal. Let's transition a little bit and talk a little bit more on the wholesale side, because it's obvious that you have put in the time and the resources into your education. And that's obviously something that's a huge part of your business where you're offering that to others. So first, let's start a little broad. If an agent wants to niche down and starts writing in the personal insurance for the more affluent individuals, what are some of the first few things that they should be focused on?
Learning the product is a big help. Again, the two sources, the two that you can get into without being a Chubb master dealer or a master agency is the CIC has the CPRM, Certified Private Risk Manager, the Private Risk Management Association, CPRA, Certified Personal Insurance RiskAdvisor. They both have good classes. I highly recommend both. It's probably easier and faster to go through the PRMA program versus the CPRM. The testing is different. The CPRAA, more of a choice, true, false. There are versus that if you've taken a CIC course, it's all open to, tell me some differences between the standard auto policy and the high net worth auto policy. I can tell you one place where the standard personal auto policy is broader form on the standard market that is the high net worth space. I'll just give that away. And that is when it comes to racing. In the high net worth policy, the definition is racing of any type. In the standard market, go look it up, it's on the track. So if my kid's street racing in California or here in Texas and has an accident and they're liable, there's no exclusion in the standard personal auto policy, whereas it is excluded in the Chubb AIG policies of the world. But how do I know that? Because I've taken the classes and I read policies and I've learned it. It wasn't just something I dreamed of my own.
Yep.
And so knowing differences in the policy types and forms, umbrellas, another one, home is huge. Just the top of unlimited replacement costs. It's called guaranteed. In all states, but about 5. You can't get it in Florida or California. But it's guaranteed, right? Yeah, imagine that. Backup of sewers and drains, ordinance and law is equal to coverage A. It's not 10% of cover, 5 or 10% of coverage A. And if the home is a complete loss, they can just cash out coverage A, B, and C and go buy someplace else because time is money. Why do I want to wait 2 years to rebuild this? Well, there's another home nearby, or I just decide I'm going to move because I have money. Time is money in this space. You can't cash out a State Farm Allstate policy unless it's in a flood zone. They don't allow you to move there or whatever the exclusions are. As a general rule, I know there's occasionally exceptions in some, but it's night and day. So you have to know that. The fastest and easiest way to know it, and I knew nothing in 2014 about all this stuff. I learned it by fast tracking and taking the first CPRM class. It was at the Fireman's Fund building in October 2014. Of course, Fund got bought out by Ace, so the next year it was Ace, and then Ace bought Chubb. The next year it was Chubb. Same building in downtown Chicago. But I went through that. I was actually I took the first 4 courses, and the 5th one I'd actually had knee surgery, couldn't take, so I wasn't through the first class that got the plaque, but I have the designation because I finished it. But so that's the first place to start. And then if you work with me, Kleeco, we're not just, if you send me a quote, I'm going to say, sorry, on your coverage A, you're wrong. It's not enough. But if you go to Burns & Wilcox or go even the Kelly Klee today, they're only going to quote what you ask for.
Yep.
You don't want that because you're going to look horrible if you ask for $2 million and actually coverage A is $3 million. The underwriter assumes that when we send in the quote that we know what we're doing. Generally, they don't redo it for us and they give it back. And then the inspection goes out and all of a sudden your premium went up $1,500, $2,000 because you're so far off on coverage A.
Yep.
So I recalculate it. We have the tools with the carriers to do it. Marshall, Swift & Beck is not meant for this space. I will rework it. We'll also talk to you about the why. We'll talk about how to sell it when we're done. Not just, yeah, great, good luck selling this. We'll talk about how do we present this? How do we go about winning the business? I talk about a lot of Mike Strom, so Unstoppable Profit Producers. Of course, he sold his agency, I guess 2 years ago, this last December. But 30-year plus agent, and he's awesome at it. I started working with Mike's team once he learned 5+ years ago that I did it. And even though he had Chubb through his aggregator, I worked with his team, and they sold the biggest personal lines accounts they've ever had in his history. First one was like $35,000, then we got to $70,000 because I could help his team. Let's talk about how we're going to present this.
Yep.
And it's fun. He has really smart people. Mike has really sharp people, and we really have fun with it. And one of my favorite closes, I got good news and bad news for you. So, okay, which you want first? The good news is it's going to cost you a lot more, but the good news is you're not going to have a $10 million self-insurance problem now or whatever it is. And it takes the right personality to do that. But again, we always talk about how do we present this so we can win the business.
Yep.
And so that's the difference. I'm not just giving you a quote. Good luck. Hear from you next. If we do 1 quote a month and we close 1, that's great. I'd rather do that than quote 10 and never hear from you and we never close anything. But the goal with working with me is to help you win the business. Because otherwise, why do you want to do it? If you go to Burns and Wilcox, whoever you're using, RPS, whomever, they're just going to give you back a quote. And sometimes your aggregator is only going to give you back a quote.
Yep.
And if you don't have the experience and work in this space, you're hoping to sell it on price. That's all you can hope for. And so that's the difference you get with working with me.
I'm really excited for you, Bob, because I know that it's 2023 is starting over, but I'm really excited for both you and for our industry and those who are going to connect with you, is because if you've been watching this video and you still are doubting whether this guy knows what he's talking about and can help make your high net worth and those quotes have a higher closing ratio, then I just stop watching. I don't know what else we're going to be able to do for you, but I'm excited for you because I'm excited to watch you build this. And as we've talked about, agents who want to wholesale or have Bob wholesale for you, you're actually going to get a free RiskAdvisor account through Bob, so that way you can send the data over to him as a submission, and he's going to be able to use that to get that out to his underwriters. And with that, it's going to walk you through a lot of those questions and a lot of those concerns that he'll need, and it'll keep you from having to go back and forth with the client. If you're wanting to get into this space, wanting to get with you to be able to get some quotes, the wholesale quotes, but if they're wanting to get into this space, what are a couple tips on or strategies that they can use to attract these type of clients?
Real quick on the RiskAdvisor form. The reason I like it, folks, is it always asks all the questions all the time. You're not winging it, writing things down on a piece of paper and having to go back and forth. And believe me, before we had our own intake form, I mean, think of an Accord form. The Accord form was never built for this space. And ask the right questions for discounts and they quote it. So it's useless pretty much. You can get the ballpark, but it's not going to be, it's just too high level. It doesn't get down to the details we need. And the RiskAdvisor, David's form does. So I'll put that plug in. But to get in the space, you can buy leads. That's what we did. We also generated our own, obviously better. And I can't get enough volume cost efficiently on my own. I encourage you to look at the internet lead companies, obviously Hometown, my company, but there's others. Quote Wizard does a great job. We did well with them. EverQuote, they're just really good at it. All Web Leads is the biggest of the space. They do live transfers. Live transfers for me and our agency, we tried them, don't work. And the reason they don't work is over 50% of the time, your whole team's busy and can't take the phone call when it rings. So what happens then? Then the company has to try and set an appointment and say, okay, well, let somebody from Kleeco call you back. And so you've lost the momentum of that. I like the idea, but I know the people in the space and all of them say, nobody answers the phone even 50% of the time. You're paying a lot for that transfer.
Yep.
What I'd rather see you do is what we did. We hired a call center to call the leads. They don't have to be licensed because they're just asking questions.
Yep.
And you can teach that in your own office if you want to. They don't have to be licensed. They ask your diagnostic questions. First, you have to build a little value, and we give them a script for that. Build value. Why us? Why are we doing? And what's the process? You set the expectation up, and then they say, I need a little information. Never ask a question you get online. Unless it's a brand new build or it hasn't been sold during the internet age, they've lived in it 30 years, but you can't get any information online. You can get all the information online. It's out there, Zillow and whatever site, okay, on their home. But they can't get discount questions. Do you have a currently installed generator? Do you have security? Do you have a guard gated community? All these things, they don't have that. Right? You can find out they have a hip or gable roof online. And again, unless it's a brand new build or it's so old it's not on the internet, any new data. And those are, yes, we get the new builds. The older ones in our space are rarer. Yeah. But so internet leads work, but also relationships work. The biggest ones that I've seen and come in from the relationships that you, the local agent, has developed or friends that have moved up in the space. If you're insuring a $2 million home with Mercury or Safeco or Travelers, you're not taking care of your customer. You're not. It's not even the right product. Yes, they have a price, but man, the claims experience and the coverage is not even close to what Chubb and AIG and Pure and Cincinnati in this space can offer. That's one place to start and say, look, I've got, maybe you say, I'm taking a course. I'm partnered with Kleeco Insurance. We can work this, at least show you the differences. And I have the forms from AIG and Chubb that you'll see on my site soon right now. I email them to you that help you understand those coverage differences. Again, it's a general rule. Obviously, sometimes you can endorse the standard market, but not for all the things.
Yeah.
in this space. So there's where you find it. Again, I know several agents that I know that are, because they've got a relationship with us, now start marketing in their communities, those higher net worth communities, or just subdivisions in their area, because now they have somebody to work with where they can win the business, whether they say it's only $99.95 and you got good, so we can help you close that business. But Interlead's work, the difference, we had our own tech, so because obviously, as I said, the space does not care about the replacement cost. So we had written our own tech. So when we buy the lead, we went out real fast, either by square footage or by Zillow. We had two things and say, okay, yeah, we'll buy it because it meets that. Like in Houston, a 3,000 square foot home in Houston is not $1 million. Okay. But in some New York and California, Colorado, the part of it is David's market. So zip codes, you have to be, or not zip codes, but square footage, it depends on the state and the space. But those two combined, so we filtered them. But since all of you, for the most part, are in the standard market, and you're adding on this space, you have a place to go if it doesn't meet the filter. You wanted $1 million home, sorry, it's only $300,000. You still have a place to go with it because you have that market already. And the cool thing is they're already talking to you. Okay. We had to set up an agreement where we actually did warm transfers or emailed to a partner in the standard space that would write that for them because it wasn't what we wanted. And the reason is writing in all 50 states, a local agent having that presence in your market, if the price goes up $100 or something, they want to talk to you, and that they're more price sensitive than they are in this space. And since all my team worked from home remotely, even before COVID, we didn't have a local office. So we needed the retention, and by offering the 24/7 phone service, by offering our app, we had those things to help weaken that service relationship bond that the local agent had by offering the availability and the tools and our expertise.
Yep.
And so for our team, FaceTime like this got better because of COVID. People got more used to Zillow, whereas before they weren't. So actually that was a win for us. But we're always on the phone. So having that right personality that's friendly and has emotional intelligence to really listen to what the consumer is saying, that's how you win and that's how you retain the business. And so whether it comes from internet lead or from relations you made, that's how you do it. Everybody in our space talks about family offices. Woo, family offices. You haven't heard that term. It's usually people that have at least $100 million net worth or larger. Think of legacies, families, generational wealth. But newbies, they have multifamily offices. They handle people that have less than that net worth. Everybody wants in that space, and yet we had two. But the reason we had them was we got them because of our investors. They had family office, and so we got introduced to them. And they all said the same thing. Everybody's offering the same thing. Everybody says they have all the carriers. They do this. They do that. What can you do different?
What can you actually do for me?
Yeah. What's interesting is even these big guys, the Willises of the world and the Locktons, their 24/7 service is their sales guy gives out a cell phone. Having trust, again, having a call center that had emotional intelligence. They weren't licensed. They had my cell phone number originally. Then we expanded to the manager of my service department and said, look, if it's an emergency, it's at 2 a.m. in the morning, it's a Saturday or Sunday, they hold on, I'll call the president of the company. And they call me. It's amazing. They're amazing. Wait, aren't you the president? Yeah, we're taking care of you. I've had people buy multi-million-dollar paintings on weekends where the art gallery said, oh, you have automatic coverage, maybe up to $1 million if you have the right policy with the right carrier. And so I had to go. So the customers called. Thank God the customer called our service center. They called me. I said, no. And then the art gallery guys on the phone said, yeah, they do. If they had Chubb, they'd have this coverage. I said, no, I represent Chubb. Trust me.
Yeah.
If somebody told you that, they didn't.
I know a little bit more about Chubb than you. Yeah. So.
And in this case, the one that I told David the story, the art gallery was going to loan them this $2 million painting for 3 days. So the customer was going to pay to freight it to their house. And they're going to look at it for 3 days, see if they like it before they purchase it out, they'd ship it back. Well, one is they were loaning them the painting, they didn't own it.
How do you take ownership?
So sorry, how do you? So there's a whole bunch of issues. But I've also had people call me to the Houston rodeo and they're buying a new car in New York. Well, if you live in New York, you cannot leave the lot with your car without an ID card with that car on it. Doesn't matter, you have insurance on the car you're trading in. So we had those number of times. And so I called and said, look, call me with your cell phone number or text me with your cell phone number and your name, and I'll have somebody call you back in 5 minutes. All my CSRs were connected, right? I just chat to the group chat. Hey, is anybody home? I just please call this guy. He needs an insurance card. And the first one to see, I got it, boss. And 5 minutes later, the customer's happy. And it takes we all work from home. It took 5 minutes. And when you have 6 or 7 people working from home, somebody's usually home. We've never had a problem with that. So it's offering that type of service that, again, differentiates you. But the cool thing is, you local agents, you have relationships. I think of Claudia McLean. Oh my God, everybody knows Claudia in Washington, her area, because she's doing all these things locally. She's out in the community. You think of insurance, you think of Claudia. And so a lot of you local agents have that, which I don't have. I've literally had people say, hey, can I come over to your office and get a cup of coffee? And I've tried to overcome that.
Yeah,
Look,
10
even
hours.
if I did, yeah, I'm not the guy that's coming out for the claim. I'm not the guy coming out to the home inspection that has the expertise. Usually I can win that, but sometimes I don't. They want a local agent. At that point, I literally picked the phone. I called the David types where, hey, I have a customer I just can't overcome. He's a great IG fit. And you handle it and I'll refer him to you. And it is handled, because I'm not going to tell you, sorry, I can't help you, and go shop again. I'm going to refer it to somebody I know. A lot of times I'm in. And that way the customer is taken care of. And that's the most important thing.
That's awesome. That's a great way to finish this call up. And Bob, I really do appreciate your time today. I know that I'm looking forward to going back and editing this video, because I'm going to make sure to hit a couple of those key points and get them to my sales team to make sure that we get a refresher on those, because these are all things that we've talked about in the past, but not with the way that you handle it. For anyone who's interested in working with Bob on the wholesale side of things, I'm going to have his contact information below the video or in the comments, depending on where you're watching this video. But we really wanted to take this time to provide a benefit to you. There's a lot that goes on in this arena. And as Bob had mentioned, there's plenty of policies that are written incorrectly. And even if you already have a wholesaler or aggregator that represents a Chubb and AIG, or you have some of those maybe direct, I encourage you to reach out to Bob, talk about what he can do for you and how he can help you increase your closing ratio on these types of accounts. So Bob, thank you so much. Thank you for hanging out with us today, and looking forward to getting to catch up again soon.
Thank you. And thank you, folks, for listening in. Take care.